There's one debt in America that never expires. Not in 5 years, not in 10, not ever. And most people who owe it don't even know it exists. Right now, somewhere in America, someone hasn't filed a tax return in 3 years, maybe 5, maybe longer. And they're telling themselves the same thing every single one of them tells themselves, I'll deal with it eventually. Nothing's happened yet. Here's the problem with that sentence. Nothing happening yet isn't the same as nothing happening. Because unlike almost every other debt you can owe in this country, there's one specific bill that doesn't have an expiration date. Not 5 years, not 10, not ever, as long as you never file. And by the end of this video, you're going to understand exactly why that single fact changes everything about how the IRS treats you compared to literally anyone who filed and just couldn't pay. Quick note before we go further. I'm not a lawyer or a tax professional, and this isn't legal or tax advice. This is general education based on IRS publications. So if you're dealing with an actual filing situation, talk to a licensed CPA or tax attorney about your specific case. Okay, let's get into it. Most people assume the IRS punishes late payment. That's not quite right. The IRS actually treats you owed money and paid late as one problem, and you didn't file at all as a completely different, much more serious problem. And the gap between those two is bigger than almost anyone expects. Let's start with a version everyone pictures. You file your return, but you can't pay what you owe. In that case, you get hit with something called a failure to pay penalty. It's small, 0.5% of your unpaid balance for every month it sits there. It caps out at 25%. Annoying? Sure. Survivable? Absolutely. Now, here's where it gets interesting. If you don't even file the return, regardless of whether you could have paid, the penalty jumps to 10 times that rate, 5% of your unpaid tax for every month or partial month you're late, up to a maximum of 25%. Miss the deadline by 1 day into a new month, and you owe for that whole month. There's no partial credit for almost making it. And if you're more than 60 days late, there's a floor. The minimum penalty becomes whichever is smaller, a flat dollar amount or the entire unpaid balance. In other words, past a certain point, the penalty doesn't scale down for small debts. It makes sure there's always a real cost to waiting. Now, stack both penalties on top of each other because that's what actually happens to most non-filers. They didn't file and they didn't pay. When both apply in the same month, the IRS doesn't just add them together in full. The filing penalty gets slightly offset by the payment penalty. But don't let that sound like relief. In practice, that still means your unpaid tax bill can effectively grow by something close to 5% a month, month after month, until you're staring down a balance dramatically larger than what you originally owed. But none of that is even the scary part yet. Here's the scary part. If your failure to file wasn't just neglect, but the IRS determines it was fraud, meaning you intentionally didn't file to avoid paying that 5% monthly rate, doesn't just stay put. It nearly triples, 15% per month, capping at 75% of your unpaid tax. Read that again, 75% on top of the tax you already owed. So far, everything we've covered is still just about money. Bigger and bigger numbers, sure, but numbers you could theoretically pay off. Here's where the story shifts from expensive to genuinely dangerous. Every debt you can think of has a clock running on it. Credit card debt, medical debt, even most IRS audits. There's a window where the government has to act. And after that window closes, they generally can't come after you for it anymore. For a normal, honestly filed tax return, that window is 3 years. The IRS has 3 years from when you filed to audit you, find a problem, and come collect. 3 years. That's it. File your return, even if it has an honest mistake on it. And after 3 years, in most cases, that chapter is closed. Now, here's the sentence that should stop you cold if you're someone who hasn't filed in a while. According to the IRS's own published rules, if you never file a return at all, there is no limit on how long they have to come after you. Not 3 years, not 6 years, no limit. The clock literally never starts because the clock only starts once you file. Skip filing and you're not getting a shorter countdown. You're getting no countdown at all. Compare that to someone who filed and simply couldn't pay. Their debt clock is running. The IRS has a defined period to collect before it starts closing out. Meanwhile, the person who just quietly didn't file, their file sits open indefinitely. 10 years from now, 20 years from now, the IRS can still open that door. And here's a twist that catches people off guard. This cuts both ways. If you're actually owed a refund, if the government owes you money, waiting too long to file doesn't just delay your payday. Past a certain point, you can lose the right to claim that refund entirely. Meanwhile, your obligation to them, if you owe, doesn't get that same expiration. You could be sitting on a decade-old unfiled return, where you actually would have gotten money back, and the door on that refund has already quietly shut, while a different door, the one where they can still come collect from you, never does. Now let's talk about the word that changes everything. Willful. There's a real difference in the eyes of the law between someone who fell behind because life got complicated, a divorce, a death in the family, a business that fell apart, and someone who simply chose, on purpose, not to file. The IRS actually builds an exception into the penalty structure for the first group. It's called reasonable cause. Show a good reason and good faith, and the failure to file penalty can be waived entirely. But willful non-filing is a different category altogether. It moves out of civil penalty territory, fines and percentages, and into criminal territory. The IRS's own materials list willful failure to file a return, tax evasion, and filing fraudulent returns as prosecutable offenses. That's not a maximum percentage fine conversation anymore. That's a you could be criminally charged conversation. To be clear, this is genuinely rare, and it's reserved for cases involving deliberate, sustained evasion, not someone who missed a deadline. But the door exists, and it's specifically tied to whether the non-filing looks intentional. So here's the real mechanism behind all of this. The thing that explains why the system is built this way. A tax return is functionally information. When you file even a return where you owe and can't pay, you're telling the government the truth about what happened. You're inside the system, accountable, and on a clock that eventually runs out. When you don't file, you're withholding that information entirely. And the government's response to withheld information is fundamentally different from its response to an honest, unpaid debt. One is a financial problem. The other looks structurally like concealment, whether or not that was ever your intention. That's the trap so many non-filers fall into without realizing it. They think of an unfiled return as maybe later problem, equivalent to a bill they're putting off. But the system doesn't file it under unpaid bill, files it under unresolved. And unresolved doesn't have an expiration date. Here's the part that should actually make you feel better though. None of this is designed to be a trap you can't escape. The IRS has an entire structure for filing. Late, even years late, through what's genuinely called an automatic 6-month extension process for the current year, and standard procedures for filing back returns for prior years. Filing a return you're years behind on doesn't retroactively make things worse. It does the opposite. It starts the clock. It converts an indefinite, open-ended exposure into a defined 3-year window. It gives you access to reasonable cause relief you can't even ask for while unfiled. In almost every single case, the single most powerful move a non-filer can make isn't finding a clever workaround. It's just filing the return even late, even without the money to pay it in full, because a return with a debt attached to